Ford faces $2 billion tariffs cost in 2024, impact of U.S.-China trade tensions. The impact of President Trump's tariffs is a hot topic, and it's time to delve into the numbers. Ford, a prominent player in the automotive industry, has revealed a staggering cost of approximately $2 billion for this year alone, a figure that surpasses their initial expectations. Despite their extensive manufacturing operations within the U.S., Ford is not immune to the effects of these tariffs. But here's where it gets controversial. Ford's competitors, such as General Motors and Volkswagen, have reported even higher costs, with GM's losses exceeding $1 billion and Volkswagen's at $1.5 billion. So why is Ford's impact less pronounced? Ford's finance chief, Sherry House, sheds light on this. She attributes the increased costs to the unexpected longevity of higher tariffs on Mexico and Canada, where Ford maintains facilities. Additionally, U.S. tariffs on imported aluminum and steel have taken a toll. And this is the part most people miss. Ford's CEO, Jim Farley, has been in regular communication with the White House, aiming to secure lower tariffs, particularly on vehicle parts. He believes there's potential for a significant turnaround if negotiations go well with the administration. Trump's strategy involves raising duties on a wide range of goods, with a specific focus on cars, car parts, and the essential materials required for their production. He justifies these measures as a means to encourage companies, both domestic and foreign, to manufacture their products in America. However, the financial markets have reacted negatively to Ford's earnings announcement, with their shares dropping by about 1.5% in extended trading on Wednesday. So what's your take on this? Do you think Trump's tariffs are a necessary step to boost American manufacturing, or are they causing more harm than good? Feel free to share your thoughts in the comments below. Ford's $800 million tariff hit. How it led to a shocking quarterly loss. A tale of tariffs, banks, and trade, unraveling the economic web. In the complex world of international business, a single decision can have far-reaching consequences. Let's dive into some recent developments that have shaken up the automotive, banking, and trade sectors. Ford's tariff woes, a $250 million hit. Despite being an American automotive giant, Ford Motor Company found itself in a tricky situation last quarter. The company paid out a staggering $800 million in tariffs, which wiped out its net profit and resulted in the first quarterly loss since 2023. But here's the twist. Ford manufactures most of its vehicles in the U.S. So where did these tariffs come from? The answer lies in the imported parts and the fees on steel and aluminum, highlighting the intricate web of global supply chains. Chase is branching out, a strategic move. J.P. Morgan Chase, one of the biggest players in American banking, has been on an expansion spree. In just 7 years, they've opened 1,000 new branches, bringing their total to a whopping 5,000. That's more locations than most of their competitors combined. But is this a wise move in an era of digital banking? And this is the part most people miss. Chase's physical presence could be a strategic advantage, especially when it comes to attracting and retaining customers who prefer in-person banking services. U.S.-Mexico trade talks. A delicate balance as President Donald Trump prepares to impose a broad set of global import taxes. The U.S. and Mexico are in a 90-day negotiating period. Trump's Truth Social post about his conversation with Mexican leader Claudia Sheinbaum suggests a positive tone, but the 25% tariff rates remain in place. This delicate dance between two nations showcases the complexities of international trade and the potential impact on global markets. And here's where it gets controversial. Some argue that these tariffs could lead to a trade war, while others see it as a necessary step to protect domestic industries. What's your take on this delicate balance? How Ford's Made in America strategy faces challenges in Trump's trade war. Imagine this. The very heart of American automotive manufacturing, Detroit, is facing an unexpected challenge. The company that has always championed Made in America is now feeling the sting of its own strategy in the midst of Trump's trade wars. Let's dive into the fascinating and complex world of Ford's manufacturing decisions and how they're backfiring in today's political climate. But here's where it gets controversial. Ford Motor, the second largest car maker in the U.S., has always been proud of its commitment to domestic manufacturing. In fact, a staggering 80% of the vehicles Ford sells in the U.S. are built right here on American soil. This makes Ford the top producer of vehicles in the United States, surpassing all other automakers. But this is the part most people miss. While this strategy has historically been a point of pride and a key selling point for Ford, it's now becoming a significant liability. The tariffs imposed by the Trump administration are hitting Ford harder than many of its competitors. Why? Because Ford's heavy reliance on U.S. manufacturing means it's more exposed to the fluctuations and uncertainties of the U.S. market. And this is where the irony lies. The very thing that has been a strength for Ford, its commitment to American manufacturing, is now a weakness in the face of trade wars and tariffs. But let's not forget, this isn't just about Ford. This is a cautionary tale for any company that puts all its eggs in one basket, so to speak. It's a reminder that in today's globalized world, diversification and adaptability are key to survival. So, what do you think? Is Ford's strategy a bold stand for American manufacturing or a risky gamble in today's political climate? Should companies prioritize domestic manufacturing, or is it time to rethink our approach to global trade? We'd love to hear your thoughts in the comments below. Let's spark a conversation and explore the complexities of this issue together. And this is the part most people miss. The tariffs imposed by the Trump administration are hitting Ford harder than many of its competitors. Why? Because Ford's heavy reliance on U.S. manufacturing means it's more exposed to the fluctuations and uncertainties of the U.S. market. And this is where the irony lies. The very thing that has been a strength for Ford, its commitment to American manufacturing, is now a weakness in the face of trade wars and tariffs. But let's not forget, this is not just about Ford. This is a cautionary tale for any company that puts all its eggs in one basket, so to speak. It's a reminder that in today's globalized world, diversification and adaptability are key to survival. So, what do you think? Is Ford's strategy a bold stand for American manufacturing or a risky gamble in today's political climate? Should companies prioritize domestic manufacturing, or is it time to rethink our approach to global trade? We'd love to hear your thoughts in the comments below. Let's spark a conversation and explore the complexities of this issue together.